Now, oil prices recovered on Wednesday, driven by market euphoria. Now, however, crude prices are facing a turbulent future, with Goldman Sachs predicting Brent crude could plunge below $40 a barrel in an extreme scenario. As global economic uncertainties and US-China trade tensions intensify, the oil market is bracing for more volatility. Could this be the beginning of a deeper slump? Take a look at our next report to find out.
Goldman Sachs has issued a stark warning regarding the future of oil prices, suggesting that Brent crude could potentially fall below $40 a barrel in an extreme scenario. This forecast comes as global economic uncertainties, including the trade tensions between the US and China, continue to create turbulence in the markets. Brent crude is trading around $60 per barrel, after falling over 20% in less than a week. Goldman Sachs's analysts believe that a combination of high production levels, ongoing geopolitical risks, and a possible US recession could push prices even lower. The investment bank's outlook hinges on a prolonged slowdown in global economic growth, which would suppress demand for oil. If oil production remains elevated while demand falters, the market could experience a significant surplus, driving prices downward. Furthermore, the escalation of US-China trade tariffs, particularly if they lead to a full-blown recession, could exacerbate this trend. Goldman Sachs predicts that while oil prices might dip to $40 in the near term, they could gradually recover to around $50 by December 2026. However, the risk of further declines remains high if the global economy continues to struggle. The situation highlights the delicate balance between economic factors and energy markets, with oil prices reflecting the broader uncertainty facing the global economy. Bureau Report, WION, World is One.
And for more on this, we're now being joined by Mr. Amrish Baliga, independent market analyst, live from Mumbai. Thank you so much for joining us on World Business Watch.
Morning. Good morning.
Good morning. And now, to begin with, what do you think are the factors influencing a crash in the crude oil prices?
See, for any commodity, the prices are influenced by demand and supply. So as far as oil goes, there was a fear that the trade tariffs will lead to a recession in US and possibly Europe. So with a global slowdown, the demand for oil was expected to come down. At the same time, OPEC, which is a consortium of major producers of crude, they announced a hike in output for May by about 411,000 barrels per day. So on one side, we were expecting the demand to come down. And on the other side, there's been a hike in supply. So this, in fact, led to a crack in crude prices. However, overnight, a lot of things have changed, with the President Trump announcing a 90-day pause on tariffs except China. So this has led to an overnight rally in crude. So overall, policy matters are very fluid. And I think we need to brace for extremely volatile markets, whether it's the stock market or the commodity market. And this policy flip-flop anyway is not good for long-term growth. So world economies, in fact, require stable policies, and that's what is missing today.
Right, and that being said, just for better understanding here, if crude oil does hit the $40 as Goldman Sachs predicts, what impact will such moves have on major economies like, of course, China, US, India?
See, China is the largest importer of crude, and India is the second largest importer and the third largest consumer of crude. So at $40 a barrel, it's beneficial for both these economies. But for US, crude at 40 is a sort of a break-even for their shale production. So I would term it as neutral for US.
Right, and just inversely, what does this also mean for major oil producers?
See, it's negative for the oil producing nations, and generally in such cases, we see a cut in production. And it can also lead to geopolitical issues if the prices remain low at about $40 for a long time. As of now, I would say $45 to $50 or even a sub $60 per barrel is a balanced rate where everyone benefits, whether it's the producing nations or the consuming nations.
All right. Well, Mr. Amrish Paliga, thank you so much for joining us on World Business Watch with your insights on this. It's always a pleasure to have you on with us.
Thank you.